We've got Jay Woods, Chief Global Strategist of Freedom Capital Markets. Jay, it is good to see you.
Good to be here. We're going to talk about Nvidia. Why?
I know, like what's coming up? I mean, just
there
no big deal.
anything else we're talking about? We talked about Abercrombie and Fitch going into this.
Yes, exactly. But okay, you say Nvidia is the most important stock in the world. It is the most valuable company, so one probably couldn't argue with that. So how should investors think about the ripple effect?
Yeah, well, the ripple effect, it's going to affect everyone. Every 401k. It's almost 8% of the S&P 500 on its own. Semiconductors, 22% of the SMH, 15.8% of the XLK, and then, of course, the Qs, the NASDAQ 100, 9.8%. And it's also in the Dow, believe it or not. Remember the mighty Dow? It's only the 20th ranked stock in the Dow because it's price weighted, but it is going to move markets. Now the question is, how and in which direction? And that is the million-dollar question. Nvidia, they're going to beat. I don't know what the whisper numbers are. Where do we get these whisper numbers?
I don't remember what that. The whisper number.
I don't hear guys whispering down here.
Not like they used to.
Not like they used to. But I suspect they'll beat. It's all going to be about that guide and all about China and tariffs. I think that is what's going to set the stage if this rally can continue. It broke out of a very nice, and I think we talked about it with you last quarter. The stage was set. It technically broke out. It ran. It hit those targets of 180, 185. Now, does it have enough to get this market, which is at all-time new highs, to that next level? That's the question.
But a lot of analysts have been boosting their price targets to above 200 now. I've seen more of that. So is that really the next, kind of target that's in its sights? And even if they beat and raise, Kevin Green pointed this out earlier, that often in recent quarters, typically it's typical patterns, it still sells off.
Yeah, and you have to watch. So for the traders out there, for the long-term investors, I still think this is something you have to buy, put away, and you don't want to worry about it and not worry about all the nuances during the earnings and how it reacts. If it does drop, there are certain levels you want to watch. You want to watch this 160, 165 level, the 50-day moving average. That's held very nicely over the last 3 months. And then 150, the ultimate level. To me, if there's some bad news, it could retest that level from where it broke out. But for the long-term investor, put it away. For the short-term investor, watch how it trades after hours and then after it opens at 9:30 at the NASDAQ tomorrow. It tends to gap on earnings day, and you want to see what it does that next 30 minutes. Does it hold that gap, and does it follow through? To me, that's strong price action, and that tells us we're going to 200. We're going to be a $5 trillion market cap company over the next 6 to 12 months, probably sooner, knowing the trajectory of this stock. But watch price action after the opening. To me, the call is going to be interesting. I think he may take a robotics approach because that is the one next part of this story that has not started to play out. It's less than 1% of total revenue, but it has the most growth and the most interest because it's got a cute little robot. Who doesn't like that? But no, in all seriousness, watch price action for those trading this stock. If it does gap up or gap down, watch if it continues in the direction of that gap. So as a former trader, that's what I always follow. I would be neutral. I would have no position going into it if I was trading the stock. It's too much of a gamble given that it's at all-time highs. A pullback on good news could happen. Hopefully it's nothing dramatic. I think implied volatility is plus or minus 6.1%.
I think that's what it is, around that.
Yep.
Let me ask you this. I want to get a broader market take because you point out where we are in terms of, how high, and even the gains that we saw yesterday, I don't think that was expected by the close.
Yeah, this is one of the more perplexing markets. We had the Powell pivot where he focused more on unemployment and said we may change our direction. And now we have the drama with Lisa Cook at the Fed and, Trump basically saying, now I'm going to get somebody in there to turn the tide. What are we doing here? And that should be very concerning as somebody that wants an independent Fed, believes that we need an independent Fed. I thought the market would sell off. The market brushed that off. The market overreacted to the upside, I believe, on the Fed pivot because we still have Friday's PCE number. We still have a CPI, a PPI print, and then unemployment a week from Friday. So there is way too much data that, data-dependent Fed, where we can see the voting members not fall into the camp that it's time to cut.
I got to ask you that question, though, about the Powell pivot. Do you think that was what also underlied some of the momentum? And look, to be fair, it does look like the entire body is shifting a certain way.
Yep.
There is obviously pressure on Cook, but, it's clear that there's this push to shift. And yes,
Yep.
it does. There is a big focus on the independence of the Fed and how long that could potentially exist.
The market reacted to the Fed independence when they were talking about firing Powell. That looks like it's gone out the window, although there could be a caveat if he doesn't do anything with Cook that he could be fired for cause. Let's not even go there. There's too much drama. Let's focus on the real story. The real story is the price action. The market is shrugging it off, and this is where it's very frustrating for people at home listening to the headlines. Just follow price. What happened in this market? We had 20% retracement in Palantir, in CrowdStrike. Nvidia only fell 5%, Broadcom fell 7%. These are some of our leaders. We saw some rotation. The S&P equal weight broke out to new highs. Healthcare up for the year. That was the one laggard. So we're seeing rotation, the lifeblood of a bull market. We are in a secular bull market. We are getting headlines that don't make sense, that frustrate a lot of people. To me, the price action does lead seasonally. We survived August so far.
Did.
Knock on wood, we still have a few more
Exactly.
days. I apologize. But September is the trickiest month. It's the worst performing month. I don't think we're going to skate through September like we did through August. We're going to see the VIX spike. So I would buy volatility. I would take a little money off the table, wait for that gift, and Nvidia is going to be the thing. Listen, if this breaks 185 and holds above it, it's going to 200, and all bets are off because that's the leadership that's going to take this market to the next leg. I don't know going into this earnings if it has that momentum to continue that upward swing. It hasn't had a pullback that was dramatic enough, but what's good news is the other sectors are picking up the slack. So overall, I think the market is healthy. The headlines, far from.
Yeah, rotation, the lifeblood of a bull market. All right, that's my takeaway. And obviously, in terms of NVIDIA, watch out for that 185. That's Jay Woods, Chief Global Strategist, Freedom Capital Markets. Our thanks to Jay.